It is 8:47 a.m. Pacific Daylight Time. It is the 14th day of October 2025, and this is episode 1189 of Bitcoin. And oh my God, the market's dropping again. Why? Well, I'm going to tell you why. That's why you're here. It's all the news that you can use about Bitcoin and more around the world with your host, me, David Bennett. We're going to start with a little bit of an overview of what happened on Friday. I know we've talked about it yesterday, but this time we've got somebody different talking about it, and it's good to have multiple angles looking at the same object or chain of events. So we're definitely going to be doing that one. And then we're going to talk directly about what the hell's going on this morning with not only Bitcoin, but pretty much all of the markets, including legacy, right? Then seems that the United States has just bolstered the strategic Bitcoin reserve. I'm going to tell you how. And then treasury companies marching on. They're just not stopping. And this time it's with a stable coin version of gold. And then Mr. Farage over there in the UK, he's opening his mouth and he's proposing a Bitcoin reserve himself. And Elon Musk shocked the world this morning. And I'm going to tell you all about it. Going to be a shorter show today. I've got some stuff that I got to do. I can't get out of it. It's just one of those things. So let's get into it. Zoltan Vardai gonna crank this sucker up from Cointelegraph. $19 billion crypto market crash was controlled deleveraging, not a cascade, according to an analyst. Well, who's the analyst? We'll find out. Friday's record $19 billion crypto market liquidation event has left traders divided, with some accusing market makers of a coordinated sell-off, while analysts pointed to a more natural deleveraging cycle. Friday's flash crash saw open interest for perpetual futures on decentralized exchanges fall from $26 billion to below $14 billion, according to DeFi Llama. Crypto lending protocol fees surged past $20 million on Friday, the highest daily total on record, while weekly DEX volumes climbed to more than $177 billion, and the total borrowed across lending platforms also dropped below $60 billion for the first time since August. Despite multiple traders pointing to a coordinated correction caused by platform glitches and large market participants, blockchain data suggested that most of the record liquidation was actually organic in nature. During Friday's crash, open interest saw a $14 billion decline, but at least 93% of this decline was a controlled deleveraging and not a cascade, according to Axel Adler Jr., an analyst at blockchain data platform CryptoQuant. Out of the $14 billion, only $1 billion worth of long Bitcoin positions were liquidated, which marked a, quote, very mature moment for Bitcoin, Adler said in a Tuesday post on X. Still, not everyone is convinced the event was purely mechanical. Several market watchers have accused major market makers of contributing to the collapse by pulling liquidity from exchanges at critical moments. Okay, I'm pausing just to say, we keep telling people to get your coins off exchanges, and now when people did it, it's a problem? Come on, guys. Anyway, looking at order book data, market makers allegedly created a liquidity vacuum that exacerbated the correction, according to blockchain sleuth YQ. Market makers started withdrawing liquidity at 9 p.m. UTC on Friday, an hour after United States President Donald Trump's tariff threat. By 9:20 p.m. UTC, most of the tokens bottomed, while market depth on tracked tokens fell to just $27,000, a 98% collapse, said YQ in a Monday post on X. So, the feedback loop of destruction looks like this. The interaction between market maker withdrawal and ADL created a devastating feedback loop. One, you get the initial shock, the Trump tariff announcement, and that triggers the selling. Two, you get market makers withdrawing because they sense a cascade potential. Then the liquidations cannot clear through empty order books. Four, insurance funds rapidly deplete, absorbing bad debt. And then ADL activates, forcibly closing profitable positions. Not to be left out of the game, number 6, deleveraged traders must then re-hedge, which adds to sell pressure. And 7, and finally, more liquidations then trigger, and we return to step 3, rinse and repeat. This loop continued until leveraged positions were essentially extinct. The data shows open interest across the market fell by approximately 50% within hours. Quote, when the token price crashed, both MMs pulled everything from the books. 1.5 hours later, Blue turned their bots back on and returned to providing similar amounts of liquidity as before. Meanwhile, Turquoise is in the books, but barely at all. And the colors here that they're talking about, this is from, by the way, CoinWatch, is they've got a depth chart up here, and it's showing gray and blue and turquoise lines. It honestly, all we really need to know is that we had liquidations after liquidations after liquidations, and then they just finally kind of dried up because there was nothing left. It was like a desert out there, man. But looking at another unidentified Binance listed token worth over $5 billion, 2 out of 3 market makers deserted their responsibility for 5 hours. CoinWatch also claimed to be in discussion with 2 market makers to, quote, accelerate the return into the order books. So they were begging liquidity makers to come back and provide liquidity because the exchanges were drying up. So it doesn't what I don't like about this story is it doesn't really say how the organic nature of this overpowered the potential that this was on purpose. That this was, there's the headline states that this was more organic than it was, contrived, but I'm not seeing that much evidence in the body of the story that overpowers me to think that it was definitely more organic. In fact, I am still of the position, because nobody has mentioned the $600 million long that was taken out right, 30 minutes before Trump. They said that some guy opened up a new account and made a short position on Bitcoin 30 minutes before Trump announcement, but they failed to mention how big that position was. That position was $600 million as far as I can tell. And 30 minutes later, Trump lowers the boom. And then all the guys pull their liquidity out of the markets. In fact, the way that I'm looking at this actually seems way more contrived than it does organic. So you need to be the judge, because we still have some issues this morning, and it seems to be caused by China. CoinDesk, Shara Malwa is writing this one. Bitcoin slips under 112,000. ETH Doge drops 6% as China hits back on U.S. tariffs. So who knows what's going on? Maybe Shara will be able to tell us what's going on. Bitcoin fell below 112,000 during trading Tuesday afternoon Hong Kong time as China's retaliatory trade measures sent a fresh wave of risk-off sentiment across global markets, not just cryptocurrency and Bitcoin. Bloomberg reported earlier Tuesday that China sanctioned U.S. units of South Korean shipbuilder Hanwha Ocean in a move that reignited fears that the trade conflict with Washington could spiral just days after both sides signaled restraint. Stocks in Asia tumbled. Equity futures in the U.S. and Europe followed, and crypto traders were again forced to de-risk after a brief weekend bounce. Contracts tied to the S&P 500 dropped 0.7%. NASDAQ 100 futures lost a point. And Japan's Nikkei index fell more than 3%, marking its worst session in nearly 2 months. The yen reversed losses and strengthened against the dollar. Gold and silver both erased earlier gains in heavy afternoon selling, while 10-year Treasury yields eased to near 4.03% as investors moved to safety. Crypto again tracked risk. Bitcoin fell 3% to 111,869. Ethereum dropped 4%, in BNB and XRP and Solana and Dogecoin, and they go through it all, and I don't care. Only Bitcoin matters. Stack sats, stay humble. Total liquidations hit $630 million, with long positions making up 2/3 of the wipeout, according to CoinGlass. The correction extends a volatile stretch that began with U.S. President Donald Trump's 100% tariff threat on Chinese imports last week. That would be Friday, a shock that triggered crypto's largest ever liquidation event. Nearly $20 billion in positions were erased across derivatives markets in 24 hours per Hyperliquid data before a short-lived rebound over the weekend. The latest slide continues to show just how tightly crypto remains coupled to global macro risk, with an earlier bounce from Sunday nearly reversing fully. Now, remember what I told you yesterday, that the same guy that opened up that $600 million short position 30 minutes before Trump made his announcement, opened up another 167 million short position on Bitcoin again yesterday. And here we are today with China hitting back against the United States tariff threats, when Sunday and early morning yesterday, the news started saying that maybe this was a misunderstanding in translation. Well, maybe not. And I'm starting to wonder about this dude with the $167 million short position on Bitcoin, because he's in profit right now. He's in profit right now. I honestly do not think that this was organic. I think that this was contrived, and I think a lot of it has to do with insider knowledge. Now, I'm not going to say trading, but insider knowledge that the rest of the world just wasn't privy to. And if the dude gets caught, maybe, just maybe, I don't know. It's hard to say what happens to people like this, but I can't be made to believe that this is completely organic. I think somebody had prior knowledge, and it makes me hungry. For sats for snacks at sats4snacks.com. That's sats, the number 4snacks.com. It's my good friend Permanerd. What does he have? Well, he's got freeze-dried fruits like peach. He's got freeze-dried mango. What else has he got? He's got a medley pack, and these things are really delicious. The peaches especially, and the bananas. The freeze-dried bananas are awesome. But he also will provide you, if you so choose, proof of healing Comfrey Salve. And I used it on the back of my hand where my cat mauled me, and it healed up much faster than normal, because Comfrey is just that way. It has all manner of medicinal alkaloids. Yeah, I won't get into what an alkaloid is, but some of these alkaloids promote healing. And if you've got minor cuts, scrapes, burns, bruising, that kind of thing, this is not for deep cuts, right? But sprained ankles, bee stings, wasp stings, cuts, abrasions, all that kind of thing. Comfrey is what you want to use. You can get all of this at sats4snacks.com. And yes, he takes Bitcoin as payment, because if you don't take Bitcoin for your goods and services, you're not in the Circle P. The Circle P is where I bring plebs with goods and services just like you to plebs just like you who want to buy said goods and services. So do so and mention Bitcoin, and all one word is a coupon code, so that Permanerd will know that I made the sale. Again, that's sats4snacks.com. Go to sats4snacks.com and get you some. I'm just saying. All right. So The Bitcoin Strategic Reserve, or Strategic Bitcoin Reserve, however you want to say it, just got inflated. Did we buy the Bitcoin? No. We seized the Bitcoin. Matt DeSalvo, decrypt.co. United States seeks $14 billion in Bitcoin from Cambodian crypto scammer in a record forfeiture. The United States on Tuesday announced that it is seeking the forfeiture of 127,271 Bitcoin, currently worth over $14.2 billion, in the largest such forfeiture action in the history of the Department of Justice in the United States. The United States Attorney's Office for the Eastern District of New York and the department's National Security Division filed the civil forfeiture complaint against Chen Ji, the founder and chairman of Prince Holding Group, a multinational business conglomerate based in Cambodia. Feds alleged on Tuesday that Xi ran a, quote, pig butchering scam that stole billions of dollars from victims in the United States and around the world. So that's as much as I have about this story right now. We clearly have to be looking at this, because if the United States and Donald Trump and all the positioning around the Strategic Bitcoin Reserve is true, then the Strategic Bitcoin Reserve is probably going to get 127,000 Bitcoin infusion into it. We can fight and lash out and whine all we want about the fact that it's stolen money, but I honestly, pig butchering is a terrible scam. It really works over, a person's sentiment towards another person. It makes you believe that somebody's really interested in you when they're not. They just want your money, and it goes, and they drag that. It is a long game, pig butchering. It's not like a short scam. It takes days, weeks, sometimes months to actually do the full execution. And that's what makes it so sinister, not only on the person that loses their Bitcoin, but the person performing the pig butchering is essentially slave labor. They can't get away from the people that are forcing them to do this. It is terrible for everybody involved. So even though I am against the United States just seizing assets for the Strategic Bitcoin Reserve, and I know it's a slippery slope after this, at this point, this guy, I don't really care what happens to him. I just don't. So let's run the numbers. CNBC Futures and Commodities breaking. Trump trade representative says the new 100% tariff on China depends entirely on Beijing's next move. Ball's in your court, boys. Let's run. All the markets are trashed. Like I said, and energy is, getting pummeled today. Brent North Sea is down 2 points to $62.10 a barrel. West Texas Intermediate down 1.75%. Natural gas is down 3 1/3. Gasoline down a row of sticks, $1.11, or no, not $1. It is a 1.11% change to the downside. And Murban crude is also in the red, 1.7% to the downside to $63.89 a barrel. Gold and the rest of its brethren are kind of mixed this morning. Palladium is up 3 1/3. Gold is up only 0.43%, but still chilling out at $4,152.40 per troy ounce. Silver is up 1/3, yet platinum and copper are both in the red. Platinum is down 0.79%. Copper is down 2.5 full points. Ag is mostly in the green on futures today. Biggest winner is coffee, 3.5% to the upside. Biggest loser is cotton, 0.5% to the downside. And live cattle is up 1/3. Lean hogs down 2 full points and beyond. Feeder cattle is up 0.93%. Beef prices are going to go even higher. It just is. It's going to be this way for a while. Hopefully people start rebuilding the herds. Farmer or ranchers that started leasing their land from grazing to corn manufacture, I hope they start putting it back into graze and start raising cattle. It's the only way that we're going to get beef prices down. We cannot depend on Brazil and Argentina and foreign beef providers when we literally make the best beef in the entire world. So just saying that. S&P is down 0.08%, but the NASDAQ is down 0.5%. The Dow making a rebound. It is up 1/3, and the S&P Mini is up 0.59%. And Bitcoin having its problems at $112,420. Market cap is $2.24 trillion, and we can only purchase 28 ounces of shiny metal rocks with our one Bitcoin, of which there are 19,934,316.79 of, and fees are still low. 0.02 BTC taken in transaction fees on a per block basis, and there's only 18 blocks carrying 31,000 unconfirmed transactions waiting to clear at high and low priorities of 1 Satoshi per VByte, and hash rate exploding 1.07 zettahashes, not exahashes, zettahashes per second. So that's what's going on. With the crash, you might think that miners of Bitcoin would have pulled their hash rate off of the network, but no, we're back up to 1.07 zettahashes per second. So do with that what you will. From Steak and Shaken and probably Argentina's fire sale, which was the last 2 episodes of Bitcoin, and Psyduck with 753 sats says Psyduck, and God's Death with 237 says thank you, sir, no thank you. And Tulips with 200 says tulips. I walked by a large free-range chicken operation the other day. Around 200 chickens started following me, thinking I will feed them or something. I, being me, turned around suddenly and said, boo! All of the chickens ran away, leaving behind 3 dead ones. Oh man, to my dismay. Ooh, that's awful. I felt bad about it. I do not know if it was a heart attack or they just passed out. The market is exactly the same. I was Trump, the market was the chickens, and some altcoins died of fear. The FUD, the confusion and filth in the crypto/TradFi space is unbelievable. I guess it is just tulips and it's going to zero. That's sad about those chickens. If it truly was like a large confined animal feeding operation with, tens of thousands of chickens, it's very well possible that they could have died of a heart attack. But don't blame yourself. Those chickens, they're on the edge of death no matter what happens. All right. I wouldn't go around blaming yourself, Tulips. Speedy with 1,000 says, hello from Scandinavia. God, I would love to go up there just to see it. Nick Dose with 101 sats says, cheers. Reed, holy crap, with 21,000 Satoshi says, Western Mass Regional Bitcoin Meetup announcement. Join us at 6 p.m. on Saturday, October the 18th at the Dante Club in West Springfield to celebrate the 3rd anniversary of the Western Mass Bitcoin Meetup. Pizza will be provided and there will be a cash bar. If you mention you heard about us on Bitcoin, and you'll get a free laser engraved pint glass. Holy crap. RSVP at westernmassbitcoin.com. That's westernmass, M-A-S-S, Bitcoin, all one word.com. Again, for the people in the back, westernmassbitcoin.com, 6 p.m. Saturday, October the 18th at the Dante Club in West Springfield. 6 p.m. Saturday, October 18th, Dante Club, West Springfield. And if you mention Bitcoin and you'll get a free laser engraved pint glass. Dude, Reed, I can't thank you enough for helping me promote the show. Pies with 121 says, thank you, sir. No, thank you. And that's the weather report. Welcome to part 2 of the news that you can use. NASDAQ-listed Tether Gold treasury firm completes $134 million purchase of XAUT, which is Tether Gold. If I've talked about it before, maybe James Hunt will help us understand it fully. Theblock.co. Prestige Wealth announced Tuesday that it has purchased $134 million worth of XAUT, the first NASDAQ-listed corporate treasury composed entirely of Tether Gold, which is XAUT. Previously trading under the ticker PWM, Prestige Wealth began trading under the symbol AURE on Monday, and the company plans to be renamed Arleon pending regulatory approval. I'm pretty sure I just butchered that word. My apologies. The firm bought Tether Gold at the average purchase price of $4,021.81 per XAUT, according to a press release. Tether Gold represents 1 troy ounce of gold per XAUT token, fully redeemable for LBMA standard bars of gold, which are stored in Switzerland. Since launching in 2020, the asset has accumulated approximately 7 tons of physical gold backing. Gold is currently witnessing its strongest annual rally since the late 1970s, recently breaking fresh all-time highs above $4,100 per ounce, up more than 57% year to date. Quote, "This marks a defining milestone for Arleon and for the broader adoption of tokenized gold," Arleon CEO Bjorn Schmidtke said. Quote, "By merging the stability of physical gold with the efficiency and transparency of blockchain, Arleon is redefining what a modern digital treasury can be. This structure offers daily on-chain verification, regulatory compliance, and the potential for, wait for it, yield generation," end quote. The acquisition comes after Arleon announced it had raised about $150 million through a $100 million PIPE, PIPE, and a $50 million 3-year debt facility on October the 10th. Institutional digital asset financing firm Ant Alpha invested $43 million in the PIPE and gained a controlling voting stake in Arleon, building on its $20 million pilot Tether Gold acquisition earlier this year. Accredited investors, including Tether's XAUT issuing entity TG Commodities and Kyra Capital, also participated in the round, investing $15 million and $6 million respectively. So Tether Gold. Be very careful with these things. All right. I mean, USDT has been around for a long time. Tether, not quite as long, actually nowhere close to as long as the original Tether. But, the Tether crew, I've never seen Tether lose its peg to the dollar. I don't use it. I don't really need it. And if I really want gold, I'm of the mind to actually buy the physical gold and hold it. That way I know it can't be rehypothecated, which means, oh, you own an ounce of gold. Well, it so happens you own the same ounce of gold that these other 10 people own. So whoever comes calling first is the one that gets it. And the people that don't get it, that's when they find out that they were holding paper and not any actual gold. Be very careful with these kinds of instrumentations, all right? All right, on to atlas21.com. That's Atlas, the numbers 21.com. In the UK, Farage proposes Bitcoin reserve and tax cuts, according to the Financial Times during the Digital Asset Summit in London. Nigel Farage unveiled a promising vision for the UK's digital asset sector, positioning himself as a supporter of the industry. The Reform UK leader stated that he is fully aligned with the movement. Quote, "When it comes to your industry, when it comes to growth in this industry, then I am your champion." Pause. That sounds like he made a correction mid-sentence. When it comes to your industry, I mean, when it comes to growth in this industry, then I'm your champion. How can you be my champion if it's my thing you're championing and not yours? I think that was a bit of a Freudian slip. We need to watch this guy very carefully as to whether or not he's just trying to garner votes for something that he's interested in, if not for himself in total. But moving on, the strategy proposed by the British politician would represent a major shift for the UK, which has so far maintained a cautious stance toward digital assets. Farage pledged measures to encourage the adoption of Bitcoin and other digital assets across the country. One of his proposals is the creation of a strategic Bitcoin reserve funded with 5 million British pounds sterling, confiscated by authorities from illegal activities. Here we go again. The Bank of England would be responsible for managing the reserve, and the proposed legislation could include provisions allowing UK taxpayers to pay taxes directly in Bitcoin, with collected funds either converted into pounds or sent directly to the reserve fund managed by the central bank. In addition to the reserve, Farage proposed cutting capital gains taxes on cryptocurrency investments. The rate would drop from 24% today to 10% if successful, making the UK more competitive compared to other European countries. The tax cut aims to encourage traders and investors to operate within the UK. Farage also opposed the Bank of England's plans to introduce the central bank digital currency, calling the project, quote, the ultimate authoritarian nightmare, end quote, and promising to stop it overnight if Reform Party wins the elections. Oh, there you go. He's pulling a Trump. He criticized the Bank of England's proposed limits on stablecoin holdings, which would cap individuals at 20,000 pounds sterling and businesses at 10 million pounds sterling. According to Farage, those restrictions are frankly ridiculous and hinder innovation. Reform UK has become the first major UK political party to accept cryptocurrency donations, collecting Bitcoin and a whole host of, well, crappy-ass coins through its website. Despite leading in numerous polls, the UK's first past the post electoral system hinders translating support into parliamentary seats. In 2024, Reform received 4.1 million votes, but they only won 5 seats. The next UK general election is not expected before 2029. Now, that's the end of the article. 2029 is a long way off. However, there has been rumors and speculation, and people have been trying to get the King of England to dissolve Parliament altogether and force a brand new round of elections because of all the stuff that's going on in the UK right now. But if that doesn't happen, Keir Starmer and all the people in Parliament stay where they are until 2029. Again, that's a long time, ladies and gentlemen. So we'll have to see what happens there. On to the last one of the day. Like I said, this is going to be a short show. Nothing I can do about it. But Elon Musk, back in the news with Bitcoin, he's touting Bitcoin as an energy-based and inflation-proof currency, unlike, quote, fake fiat. Zoltan Varday, Cointelegraph. Billionaire entrepreneur and Tesla CEO Elon Musk touted Bitcoin's ability to protect investors from fiat money printing, which may increase due to what analysts call a forthcoming government-funded race to develop artificial intelligence. Musk has praised Bitcoin's energy-based proof. I messed that one up. Musk has praised Bitcoin's energy-based proof-of-work model for its inflation-proof mechanism, which is immune to governmental fiat currency printing, as it is impossible to fake energy. Quote, that is why Bitcoin is based on energy. You can issue fake fiat currency, and every government in history has done so. But it is impossible to fake energy, Musk wrote in a Tuesday post on X. Musk's comment came in response to popular analyst Zero Hedge's post, which attributed the current momentum behind Bitcoin and precious metals to a debasement to fund the government-funded AI arms race that will play out between the world's largest economies. So Zero Hedge says the following: the money is not the problem. AI is the new global arms race, and CapEx will eventually be funded by governments, US and China. If you want to know why gold, silver, and Bitcoin are soaring, it's the debasement to fund the AI arms race, and that's when Elon Musk weighs in and says, true. That is why Bitcoin is based on energy. You can issue fake fiat currency, and every government in history has done so, but it is impossible to fake energy. I got to pause here. Elon has performed some pretty heinous acts when it comes to Bitcoin, especially when he embraced Doge. But I got to say this. He actually seems to understand Bitcoin at a fundamental level. I've never actually heard it put that way. I've been in this game for a decade, and I've never actually heard it put as succinctly as Elon Musk just put it. It is impossible to fake energy. That is a true statement. From every physical aspect I can think of in my scientific training, of which I've got a lot, it is in fact impossible to fake energy. Whether heat energy, electricity, chemical energy, it does not matter. Energy cannot be faked. It cannot be created. It cannot be destroyed. It can only be transformed. And it can never be faked. Elon gets it. Will he actually, I don't know, give up this ridiculous stance on Doge? Time will tell, but quote, AI is the new global arms race, and CapEx will eventually be funded by governments, Zero Hedge wrote in a Tuesday X post attributing the recent momentum of Bitcoin, gold, and silver to the debasement to fund the AI arms race. Tuesday's response marked Musk's first serious Bitcoin-related public post in nearly 3 years, since November of 2022, when he predicted the incoming crypto winter shortly after the collapse of FTX and Alameda Exchange. It's not a stretch, dude, to make that claim after FTX and Alameda went down. I think we all knew. I don't think we needed Elon to tell us, but quote, BTC will make it, but it'll be a long winter, Musk wrote on X on November 14, 2022, in response to Bitcoin hitting the previous bear market's lowest point of $16,000. FTX collapsed due to the misappropriation of user funds, resulting in an $8.9 billion loss of investor funds. The crypto exchange filed for bankruptcy November the 11th, 2022, and was seen as the main catalyst behind the subsequent crypto winter. Musk has yet to comment on the sustainability of the Bitcoin mining network, which he has previously criticized for its over-reliance on fossil fuels. Remember back in May 2021, electric car manufacturer Tesla suspended Bitcoin payments for vehicle purchases, citing environmental concerns, which caused Bitcoin's price to drop by 6% within 1 hour, from 58,800 to 51,600. While Tesla hasn't sold the majority of its Bitcoin holdings, the company has yet to comment on potentially reinstating Bitcoin payments, as Musk previously pledged to do if the mining network's use of renewable energy increased. On June 13, 2021, Musk said Tesla would allow BTC transactions once it could confirm that the Bitcoin mining network uses at least 50% clean energy. Bitcoin mining's sustainable energy usage reached an all-time high of over 55%, according to the above graph modeled by climate tech venture capitalist Daniel Batten and Bitcoin analyst Willy Woo. So, and then, of course, they're referring to this graph of the usage of sustainable energy in Bitcoin mining. And yes, sustainable energy has risen to almost 60% given this graph. So, but Elon hasn't said that he's going to return and let people buy Tesla products with Bitcoin. So who knows, man? I mean, I don't really trust him. kind of like I don't trust Nigel Farage. I think he's saying Bitcoin reserve just to get votes for the Reform Party. I mean, you can't blame him. I mean, it's a bit unethical, but then again, that would mean that I would have to know for sure that that's exactly why Nigel Farage said that. I would actually have to be inside of his mind and understand wholeheartedly and without any capacity for doubt that he didn't care about Bitcoin, that he just wants the votes. And I don't know that because nobody can be in the mind of another person. However, it smells funky. And every time something smells funky, I'll bring it to your attention. So that's it for today. Like I said, I've got some other things that I've got to get done. I have to. There's just no way about it. I wish I'd been able to do an hour like I normally do, and I apologize if any of you guys were expecting a longer show, but can't be helped. But I will see you on the other side. This has been Bitcoin and I'm your host, David Bennett. I hope you enjoyed today's episode and hope to see you again real soon. Have a great day.